Good day everyone, my name is Jennifer Natasha and I'm from Point Sarana Kumar, metric number 302226. Today I'm going to present about executive summary and introduction. My first point is about climate change threat. Rising weather risk endanger ports, shipping and insurance operations. For example, storms damaging port climate. My second point, it's about economic importance. Maritime sector supports 40% of GDP and most of Malaysian foreign trade. If you see, ports handle 90% of Malaysian trades since 2022 to 2024. My third point is about operational description. Floods, sea level rise and storms delay shipment and damage infrastructure. For example, December 2021, flood halted shipments. My next point is about insurance impact. More frequent and costly claims increase risk and insurance. For example, cargo claims increase after floods. Needs for new model is the last point in the introduction. Forward-looking risk and assessment are required as traditional method fail. If you see, using sea level rise outlook for risk planning. That's all from me. Thank you.
Good day to Dr. Habibah. My name is Ng Yen Ling and my metric number is 302200. So today I would like to present my part 2. So this slide has presented 2.1 to 2.6 sections. So Malaysia's marine insurance market is structured around several core coverage lines that collectively protect maritime trade and operations. So first, marine cargo insurance is the most significant segment, covering loss or damage to goods during transportations under the Institute's cargo clauses A, B, and C. So the coverage ranges from all risk protection to limited name perils, making it critical for safeguarding Malaysia's import and export supply chain. So secondly, is marine hull insurance protects the vessel and machinery against the physical damage from risks such as storms, collisions, grounding, and fire. With increasingly volatile weather conditions, hull insurers face rising repair costs and higher exposure to the total loss events. Third is the protection and indemnity insurance, address the third-party liabilities including pollution, crew injuries, wreck removal, and property damage. This line is essential for ship owners, port operators, and characters, particularly as environmental and legal claims increase. Beyond sea risk, inland transit insurance extends coverage to road and rail movements connected to ports, including warehouse and container risks. Flooding and infrastructure disruption make this extension increasingly important. In addition, pleasure craft and recreational marine insurance cover private and leisure vessels against the accidental damage, theft, and liability mainly in coastal areas. Finally, the specialized marine insurance provide additional protections such as war, strikes, piracy, loss of hires, pollution liability, and takafu-based coverage. This specialized policy strengthen risk transfer for high-risk routes like the Straits of Malacca and support business continuity across the maritime sectors. So next is Malaysia's marine insurance industry operates within the well-defined regulatory and market framework. So first, under the Malaysia's policy framework and claims procedures, marine insurance is regulated by Bank Negara Malaysia and aligned with international standards such as the Institute cargo clauses. The use of product disclosure sheets ensures the transparency in coverage terms, exclusion, and claims handling, supporting consistency in both domestic and cross-border trade. In terms of market size and growth, marine insurance forms parts of the marine, aviation, and transit segment, contributing about 8% of total general insurance premiums. Although it presents a modest share, the segment remains profitable and strategically important due to Malaysia's heavy reliance on maritime trade. Regarding the major insurers and market structure, the market is highly competitive, led by the large general insurers such as Alliance, Etika, MSIG, Tokyo Marine, and Generali. These insurers often rely on global reinsurance partnership to manage large or catastrophic maritime risks. Finally, common marine insurance claims in Malaysia mainly arise from cargo damage, vessel hull losses, and third-party liabilities. Typical cases include storm-related cargo losses in the Straits of Malacca, collisions in congested ports like Port Klang, pollution incidents, and loss of higher claims due to the vessel downtime. These patterns highlight the need for comprehensive cargo, hull, and liability coverage. So thank you. This is all for my part.
My name is Tan Jihan. My metric number is 298619. I want to present about the climate change risk factor. First is increased extreme weather risk. More frequent heavy storm rough sea, and irregular monsoon patterns. Higher risk of vessel damage and cargo loss. Increase in insurance claims during high-risk seasons. Greater uncertainty in underwriting and mortgage risk assessment. Second is the rising sea level and coastal infrastructure risk. Higher risk of flooding, coastal erosion, and port damage. Major ports affected like Port Kelang, Johor Port, Penang Port, and the operational disruption and shipment delays. Increase in property damage, business interruption, and the liability claims. Third is the operational and navigational challenge. Warmer ocean strength versus engine and performance. Coral reef degradation increases navigation hazard, and the unpredictable rainfall causes low visibility and equipment malfunction. Higher exposure to collisions, delay, and cargo damage. The last but not least is the supply chain and financial risk exposure. Severe weather causes port closures and global shipping delays. Higher risk of business disruption and financial losses. Increase in liability claims, reinsurance costs, need for climate change policy, and improved risk assessment model.
Hi, my name is Onion. Today I'll talk about how climate change flood affect marine insurance in Malaysia. Okay, first look at the Port Klang in Selangor. Port Klang is a very busy port, but it's in a low coastal area, so it can flood easily. In the December 2021, heavy rain caused flood around the port. Some roads were blocked and workers cannot come to work, and cargo handling becomes slow. Some cargo was damaged by water, goods are spoiled, and equipment like crane and trucks were also damaged. From an insurance point of view, this caused small insurance claim, like claim for damaged cargo, damaged equipment, and business delay. To reduce this future risk, the port improved drainage, raise port area, install the water pump and flood gate, and also prepare emergency plan for this. Okay, next look at Kota Tinggi in Johor. Kota Tinggi often face heavy rain and flood, especially during the monsoon season. This flood can block the road and stop transport to the port. In the yearly of 2024, flood affect many houses, school, and shop, and thousands of people have to move to a safer place. And the cargo could not reach the port on time, and it will cause delay. From an insurance view, this led to more claim for cargo delays, transport problem, and business losses. Company may also face extra costs and because of the late delivery. To manage this risk, the authorities improve drainage, use early warning system, monitor flood, and move the important equipment to a higher ground. Company also prepare plans to continue work during the flood. And the key point is, even if the port is not flooded, inland flood can still cause big problem. So port, transport company, and insurance must work together to reduce the losses.
My name is Sufeng Wei, my matching number is 298047. So for this section, I will talk about how the industry is responding to climate risk and what kind of risk management practice are now being used. Basically, Malaysia marine insurance and maritime industry is moving away from relying only on past experience. Before this, risk was mostly assessed based on historical claim. But with climate change, especially more frequent flood and extreme weather, that approach is not longer enough. This shift is mainly driven by two things. First, we are seeing more severe weather events that cause real operational and financial losses. Second is Bank Negara Malaysia pushing financial institutions to take climate risk more seriously. Through Bank Negara Malaysia Climate Risk Management and Scenario Analysis Framework, insurers are now expected to integrate climate risk directly into their operation, risk management system, and long-term planning. Looking at insurer and takaful operator, the main focus is strengthening governance and risk management. One key requirement is port level oversight. This means senior management must be direct involved in managing climate risk, not just leaving it to operation teams. Bank Negara Malaysia also introduced climate risk stress testing, or CRST. This is important because it forced insurers to look at extreme but realistic scenario instead of only relying on past claim data. This helps insurers understand potential worst-case losses. In terms of risk management practice, there are four main response. First, insurer control risk accumulation, especially in flood-prone port and logistic area, where one event could affect many policies at the same time. Second, pricing is adjusted based on factors like monsoon season. Third, insurer review policy rating more carefully, especially for deductible to avoid misunderstanding. And finally, insurer strengthen reinsurance arrangement, using scenario analysis to manage capital risk more effectively. From the port and shipping company side, the focus is really on resilience and business continuity. Physically, this means improving drainage system, building better flood defenses, and protecting important infrastructure like power supply and IT system. Some critical equipment is also relocated to higher ground to reduce flood damage. Operationally, companies are improving yearly warning system. For example, they set clear weather feature for slowing or sloping operation. They also prepare cargo protection plan in advance and improving communication with tracking company, rail operator, and port user when disruption happen. All these measures help reduce downtime, limit secondary losses like cargo damage during delay, and lower the risk of liability claim. From an insurance point of view, this control makes the operator less risky in insurance. Overall, these measures have worked quite well for small and moderate events. Port and shipping companies are generally more prepared than before, and recovering time have improved. However, big challenges still remain. High-impact flood events can still cause major disruption, especially when port and nearby transport roads are affected at the same time. Another issue is data. Many companies do not yet have very detailed data on things like elevation, asset interdependency, or exact flood exposure, which make accurate risk assessment difficult. This is why Bank Negara Malaysia continue to play an important role. By pushing climate stress testing and stronger disclosure standards, the regulator is encouraging the whole industry and improve data quality, risk transparency, and long-term resilience.
For potential loss type in marine insurance, the first point is ship damage that caused by strong storm and rough seas that could damage the ship hull, engine and propulsion system, and navigation equipment that leads to higher repair costs and higher insurance claim. The second point is cargo loss or damage that caused by rough seas that could cause the cargo to shift or fall and be lost at the sea. Seawater can damage sensitive cargo that could result in partial or total cargo loss. The third point is shipping delay that caused by bad weather that could cause for slow ship movement. Ship may switch to manual control or change route for safety that cause contract penalties, loss of market, and extra holding and fuel costs.
My name is Kunur Hidayah binti Kamaruddin. My metric number is 292992. Next, I will continue the part of claim frequency and cost rate for these potential losses. First of all, as a country that relies on maritime trade activity due to its intensive coastal infrastructure, Malaysia is directly exposed to maritime risks driven by climate change. In particular, it is likely to cause various losses in this industry, involving in terms of business, operation, cargo, and ship. The impact on marine insurance is seen most significantly where it also influences the frequency of claim and the cost of such losses. As we can see in the slide, claim frequency and cost trend for ship damage or losses is classified as high. In general, the weather-related ship losses contribute to about 25% of all total ship losses globally based on AGSC data, especially when Malaysia is located along the South China Sea and Strait of Malacca, both of which are exposed to unusual monsoon system. Ship-to-ship collision or port structure and container stack collapse are cases that have been recorded. Such damage essentially require expensive claims, including the cost of ship repair, replacement of critical component, labor, and so on. The risk of weather-related claim remain persistent and increasing, particularly for all the ships that are vulnerable to increasingly challenging operating conditions. Next, we see the claim frequency for cargo loss is classified as high, while the cost range is stated as moderate high. For your information, natural disasters are one of the leading causes of cargo losses according to UUM. The frequency of extreme rainfall due to monsoon, like in Malaysia, has created the phenomenon of major flooding, especially in areas adjacent to port and industry. For instance, Kuantan Port often face disruption of cargo operation during extreme weather events. The risk of cargo damage, such as pollution and getting wet, is a common for it, which results in frequent claims. However, cargo loss can involve large financial losses overall because damage to high-value goods, such as chemical, electronic, and luxury goods, result in very large claim payment. Lastly, ship delay also are among the claims under marine insurance policy that are increasing over time in Malaysia. They are seen as less frequent than cargo loss and ship damage. In general, extreme weather such as storm and heavy rain usually require the closure of port or the rerouting of ship for a long period of time. Here, shipping delays are likely to occur even more when ships are unable to sail or anchor. Such claims may not involve physical damage in principle, but the delay in operation can indirectly cause damage to high-value cargo. This exposed to high claim costs, which also significantly affect the insurance loss ratio.
I am Muhammad Shafiq bin Muhammad Idrus 298035. I will present about policy and strategic recommendation for insurance company. First is modernized risk model and underwriting. Transition from historical model to forward-looking claims model. Implement via partnership or internal capabilities for exposure management. Second is introduce climate adjust policy structure, update policy term to express reflect climate risk, ensure transparent product disclosure on climate-related peril. Third is frank risk transfer and reinsurance. Align insurance trade with climate accumulation risk. Ensure alignment with Bank Negara test via specialist reinsurance. Lastly is enhanced claim and data analysis. Invest a granular climate-related claim data. Build centralized database to identify pattern and supply chain weak point. government and regulation, reinforce climate risk regulatory framework, establish the climate risk management framework to mandate climate disclosure by marine insurer or takaful operator, issue marine underwriting guidelines that enforce forward-looking risk assessment and accumulation control, enable collaboration and data sharing, establish a national marine climate risk data platform, consolidate data like sea level rise, flood map, and historical loss, provide access to insurer, port, and researcher for modeling and planning, assign maintenance to a central agency. Lastly, integrate climate into marine and trade policy, mainstream climate adaptation into national marine and logistics planning, update building code and port development guidance using climate projector, introduce incentive for green shipping, ensure policy coherent through joint effort of Ministry of Transport, Ministry of Environment, and Bank measure.
So in conclusions, the climate change is having a major impact on the Malaysia's maritime sector, and the region is highly exposed because of the Straits of Malacca and our heavy reliance on the maritime trades. And the key risks include the extreme rainfall, flooding, storm surges, and rough seas, and the rising sea level. And these events are becoming more frequent and severe, and affecting the vessel, cargo, and port and the logistics. As a result, the marine insurers face a rising claims in hull, cargo, liability, and also the inland transit lines. And the operational losses and the business interruption at Port Klang and Kota Tinggi shows that how vulnerable the sector is. Clearly, the traditional loss-based underwriting is no longer enough to manage this complex climate risk. In order to tackle this challenge, regulatory oversight by Bank Negara Malaysia and the international framework is crucial, and the industry has also taken steps such as upgrading the infrastructure, improving the drainage, contingency planning, and also the risk monitoring. And this measure help reduce the small losses, but large interconnected climate risk remains a concern. Looking forward, strategic recommendations include adopting the long-term climate risk model, reinforcing reinsurance strategies, and also enhancing the data sharing, climate policy, and regulatory coordinations. And this effort aims to support the national trade, maintain the economic stability, and also ensure the sustainability growth in the Malaysian maritime sector.